Why don't you own Los Angeles anymore, and what made you leave?
The biggest issue I've had with Los Angeles is dealing with LAHD, which is the housing department. We don't want the government telling us what is and isn't affordable.
LA is the least affordable city in the entire country.
I left the comedy writing world and went back and got my MBA at UCLA. Wants to be the guy from out of state, buying up all the local real estate that nobody would touch. Instead, ask yourself, what did they see that we missed?
Welcome to No Vacancy, where I share conversations with LA's top multifamily owners, investors, and visionaries. I'm your host, Taylor Avakian, the founder of the Group CRE, and I specialize in the sale of apartment buildings in Los Angeles. On this show, we cut straight to what matters, market insights and real-world strategies straight from LA's multifamily icons to help you navigate one of the most complex real estate markets in the world, Southern California. Enjoy. My guest today is Eddie Ring. Eddie founded New Standard Equities in 2010, serves as Chief Executive Officer with over 25 years of real estate and financial consulting experience and 20-plus years of dedicated investing and operating experience in the multifamily sector. He oversees NSE's investment strategy, operations, risk management, and investor relationships. Under Eddie's leadership, NSE has become known as a leading real estate investment and asset management firm for multifamily properties located in the Western United States. Eddie, thank you to the show.
Hey, thanks a lot. Thanks for having me.
Of course.
Appreciate it.
Absolutely. So I'm very excited to have you on because I think from conversations with some friends of mine, they said you have some very strong opinions, which I'm excited to kind of dig into today. I think the first one, people who are familiar with Southern California would love to know and talk about, why don't you own Los Angeles anymore, and what made you leave?
That's a great question. And it's one that I've actually, my hard and fast rules are bent when I start to see things that are super interesting coming out, even here in LA. Mm-hmm. So the biggest issue I've had with Los Angeles was dealing with LAHD, which is the housing department. And I just found that it was so challenging and so anti-landlord that it made running small properties, which is really what you're seeing in most of Los Angeles, made it really, really challenging. However, Los Angeles is a thriving, megalopolis, a world leader of, thought, culture, economy. It's literally how could you possibly ignore such a powerful, sort of economically vibrant area? And some very, very sophisticated investors are re-examining their hypothesis that, hey, we should stay out of Los Angeles. And I think the better move might be, even for myself, to say, let's tiptoe in Los Angeles. Let's make sure we're underwriting the politics and underwriting what could happen or couldn't happen, and take a look and see if we can't find a gem that needs to be invested in. In fact, just yesterday I got an email from a friend who told me about a property that another big investor is actually selling. They're going to be selling at a huge loss.
Is that
because their mandate is to exit Los Angeles.
Yeah, wow.
And so here it is, 120 unit building or something like that in the Hollywood Hills that they're going to take a $15 million loss on. And it's like, well, I'd like to underwrite that and make.
I was going to say
maybe it works, especially if you can get it at a $15 million discount to what they paid, 3 years ago,
where the basis is today. So, tell me what, because you mentioned potentially dipping your toe in Los Angeles. What are the gems that you look for? What are the attributes of a property that, for New Standard, is like, this is what we want to target?
Yeah, so it would be if we could find something newer that didn't slide into the LA rent control, that would obviously be the best. But barring that, it has to have some size. So 100 plus units. It has to, kind of cater to a strong workforce demographic. not C quality real estate, but not necessarily luxury either. So it has to kind of fit in that B category and super well located. So you're talking about, Hollywood, the West Side. If you can find anything of scale that hasn't been picked over, it's very rare. But
so why is non-rent control preferred, and then why is location such a big driver for you guys?
Yeah, so the non-rent control piece, we want to be able to charge the rent that is affordable for folks, because we're not getting into that luxury space. But we don't want the government telling us what is and isn't affordable. We have that now at the state level. So we know that, at the state level, we can only raise rents, capped at, whatever it is, 10%.
Yeah, 10% basically.
So, but that we can kind of live with. What would be a lot more challenging to deal with would be the vacancy control. Like right now we have vacancy decontrol.
Yeah.
So, it's an apartment, resident moves out, that unit could go to market. That's, a state law.
Yeah.
And of course it's a Proposition 33 today. So make sure everybody votes no.
Yeah, it's huge.
It's huge. Once again, that is being raised by the same group that did the last two times. And it'll probably get defeated if we all, vote and support the the anti 33 measure. As long as we have that vacancy decontrol, we can navigate rent control. It's fine, because at the worst case scenario is they don't move out. You get your 4 or 5% bump or whatever it is. You're also not pouring a ton of money into the unit. So unfortunately, rent control, as everybody knows, it creates sort of some really tough living conditions for people, but navigable depending on the asset, which again, this is also an area, and you asked what we would look for. So it would be one where the residents have been turning over. It would be an asset that is slightly higher level than, like I said, no C's and B minuses, and really trying to get to a decent quality resident, demographic. Make sure that there isn't that level of embedded, renter.
Yeah.
Now, at the same time, if a seller is willing to sell with our assumption that, instead of a rollover rate of like 30%, which is typical of a rent-controlled building, if it's a rollover rate of 10% or something, something really, really light, well, as long as I can underwrite that same rollover rate and still make money for our investors, then, we can do it.
So obviously investors, I think anyone who does syndication or raises money or capital for these investments using other people's money, LP investments, right? You have to cater to what your investors want to invest in at a certain point, because they're the ones bringing the money.
Yes.
So did you figure out your strategy and then go find the LPs to fit your strategy because you were confident in that and what you felt good in? Or was it the other way around where you found the LPs and their strategy wanted to be this and you're like, okay, let me get really good at exactly what they're looking to do and keep these relationships long term?
I wish it was that scientific. Here's my philosophy, and here's what I did when I first started my company. I had a nice background from my time at Kennedy Wilson. I learned how, why, and what investors were looking for, mostly institutional investors, while I was at that shop. And when I started my own company in 2010, I had kind of this thought in my head that I never wanted to put investors' money at risk for my own ignorance, which means while everybody told me that I should go invest in Las Vegas, I was like, well, I've been to Las Vegas plenty of times, but never as an investor, or Phoenix,
only
Arizona.
lost money in Vegas.
Yeah, exactly. Well, yeah, not only that piece, but also I don't know, there's somebody that knows Phoenix, Arizona better than I do.
Yeah.
Lots of people do, but I don't. So I was like, I don't want to, what am I going to put somebody else's money in a market that I have no idea what I'm doing? So I kind of took that approach and I said, well, I know California, I know Southern Cal like the back of my hand, I know LA, I know Ventura County, Riverside County, San Diego, obviously, and Northern Cal, all the counties up there.
From your time at Kennedy
from my
Wilson.
time at Kennedy Wilson.
Got it.
And then all of Portland and Seattle, Greater Seattle.
Mm.
I'm not a real core MSA kind of guy, so I don't own anything. I don't think I've ever actually purchased anything in Seattle proper.
Mm.
And likewise, city of LA, yes, but I'm not a super downtown core kind of guy.
Yeah.
San Francisco, no. And so, I've always sort of avoided those, kind of core MSA locations. But my experience has been if you take your investment philosophy and go 1 or 2 rings out from the central downtown MSA core,
Mm-hmm.
you find a lot of that suburban product or, you can even still get elevator, whatever buildings, but it's got that, it's got a feel to it that is a little bit more accessible for workforce, renters.
Mm-hmm.
And, those are renters by necessity. They're not luxury renters. I don't want to be competing with homes. Renters by necessity. And that is what they're doing. They can't afford a house. The median home price is way too high here in California, and they're not making enough money.
Mm-hmm.
That's just what the math is. And then likewise, I can't run a property. I can't be a slumlord. I'm not doing the turn off the heat kind of thing.
Yeah.
That's just not me. People have to have a comfortable place to live that brings respect and dignity to their family, and and we treat our residents right, and usually we get paid for it.
Yeah. So if I want to take me back to 2010 when you decided to start New Standard, what was the impetus for starting your own thing? Has it always something you've had that entrepreneurial bug, or was it, tell me about that moment.
Yeah, it's an interesting time. So I went through a few different career, kind of modifications since, I don't know if you can tell, but I'm getting up there.
I don't know about that.
Yeah. Anyway, so when I was a career changer, I was a comedy writer, as I've told you. I wrote sitcoms. I wrote television shows, believe it or not.
Which seems like the complete opposite of real estate.
Very opposite. I'm not sure which is funnier. I know, at least in TV, we had a laugh track.
Yeah,
we could pretend that what I wrote was funny. But anyway, so I left the comedy writing world and went back and got my MBA at UCLA and joined Kennedy Wilson and started, kind of learning the real estate space.
And how old were you at this time?
That was I was in my young 30s.
Okay, so you had been comedy all throughout your 20s.
I was basically, I went to film school first,
okay,
out of after undergrad. And so I did that for, I wrote sitcoms for about 5 years.
Wow.
Yeah. I was gainfully employed in the sitcom writing world.
Which is, even to get in there, I think I like to look at patterns and what people just, you can look back, history is my favorite subject, and you can look back and kind of see patterns of what people were doing or how they held themselves or just the way that they actually executed on things. It's hard to get a writing job in general, right? So the fact that you're able to do that in your 20s and have success in that, I think leaves clues into maybe some superpowers that you have in terms of being able to kind of either execute on a given task or be able to get yourself in the right room and meet the right people that you need to, which I know raising capital we're going to talk about too, but it seems like for you, your ability to, and correct me if I'm wrong, but your ability to meet the right people and get in the right rooms has really led to where you are today, or a big emphasis to it.
It's an interesting, I didn't really think about it like that, but when I first started in the television business, it was exactly like that. I had a writing partner, and we would kind of get on these shows, and we would stay late and hide out in offices, and become friends with the writers, and we were, and then of course we were writing script after script. It took years, and we wrote, I don't know, dozens of scripts, and then eventually we were able to, get our stuff to an agent that believed in us, and we started finding work, which was, yeah, you're right. It was challenging. It does relate to relationships, though, and that in and of itself is exactly what the real estate space is. And so I think that what you're saying is kind of interesting, because in the entertainment space, there's an old adage, it's who you know. But what I found in the entertainment space, it is who you know, but you never know who you're supposed to know. So you have to know everybody. And so if you're in a world where you have to know everybody, that means you're going to generate a lot of false relationships. And so that's a lot of glad handing and, hey, the LA Guns thing, right? And so that piece of it really didn't fit well with me.
Got it.
It's that falsity that I couldn't stand. Not that I didn't execute on that.
Sure.
But it was that, oh my gosh, I got to go to another guy's house where I have to pretend like, he's my bestie and that one's my, it's like, oh my God.
Yeah.
Much
schmoozing.
Yeah. Just the endless amount of like, hey, we got to be in the right place at the right time, and the right, know everybody, know the person, know that. It's like, oh my gosh. Exhausting and unrelated to your talent.
Yeah.
And that was really challenging.
Yeah, that's frustrating.
When I left that business and got into real estate, I found it to be, yes, a people-oriented business, but the people that I was meeting were like genuine relationships. So I have a lot of really good friends that are in the real estate space, and we could talk about anything, and we could talk about what's going on, in the world and families and, the challenges we face. And all of a sudden it's like real connection. And as long as I'm having a real connection with somebody and I can be, myself, which is a fairly genuine type person, I don't have this overriding pressure to go out and meet everybody.
Yeah.
It's a much more nuanced kind of thing when you talk about it's all about the people. It is about the people, but these relationships are much more sacrosanct in real estate.
Was there a relationship that you can think back to that was either a catalyst or a big moment in your career from a real estate perspective? Was there a chance encounter or a meeting or a dinner or a, conference that you can think back to and be like, wow, when I met that person, things took a different turn?
Yeah, I mean, and people who know me know my story. At Kennedy Wilson, I had the fortune of working for Bob Hart, who's a tremendous guy and a great figure in this industry. And he taught me everything that I know.
Really?
And it wasn't so much as a mentor, kind of thing, but I genuinely like Bob.
Yeah.
He's a very good person and smart and, and all that. And so we actually met him while I was at UCLA. And he happened to be the president of the UCLA Real Estate Alumni Association, whatever they is.
Yeah.
Young, I don't remember what. No, not the real. Whatever. It was like
he was
the alumni president for this, for UCLA Anderson. I think that's what it was.
Yeah.
Anyway, and I was the student rep for my class, and so I had a chance to work with Bob. In that capacity, like, doing student-run events and whatnot, and Bob was terrific and very present, and he asked me what I was going to do for the summer, and I said, well, I'd love to come work for you. He goes, oh, all right.
Wow.
I'll do that.
Yeah.
So I went and kind of worked for Bob, and it was funny. My first day at that job, we were like, I'm not sure what I was going to do. I was going to do some research project or something, and my first day at Kennedy Wilson, the analyst quit. So Bob's like, all right, so we'll do that research project, but you're also going to be the analyst.
Oh my God.
Oh, okay. And so I did that all summer.
Deals? Like,
no,
you learned?
No, I was a sitcom writer. I made deals fun.
Yeah.
And,
Yeah, right.
No, so I learned quick. At UCLA, you get a real,
sure. There's a reason
UCLA.
I get it.
I got a lot of accounting and finance and all that stuff, so it was fine. But No, that summer was one where I really cut my teeth, and when I went at the end of that summer, I told Bob, I was like, hey, I got to go back to school, and he's like, wait, what? I said, yeah. He goes, no, you should stay here. Why are you going back to school? I was like, well, because I'm in the middle of getting my MBA. Like, this is important.
Yeah.
And so I agreed to stay on and work while pursuing my degree. And, of course, it started off as like, look, I'll do 10 hours. Within 3 weeks, that turned into a 40-hour work week. And, I was enrolling in classes at night and doing the, whatever I could do to get out of big group projects. I was like, all right, fine, because I actually had a really important job and one where I was learning and getting paid. So that was exciting. And I actually did my first 2 deals while at school. Do you
remember what those first 2 deals were?
Yeah, so I did one. This was an acquisition we had. My very first one that I worked on was a 110 unit project in West Covina, and it was a great little deal brought to us. I don't remember if it was on market or off market, but Bob had great relationships. We got a lot of first looks at things and whatnot. And it was a seller that we had worked with before, and we analyzed the deal, and I, ran the numbers and all that and did all the work. And Bob and I met with some Japanese investors who were introduced to the company through Bill McMorrow's relationships, I think it was. Which was also interesting. And we were, we said, great, let's do this project. And I was taking a international negotiations class at the same time as sitting in a room with Japanese investors, so it was just kind of cool. It's like, I think I learned something in school about this. Right. And, of course, I'm like, I know when not to talk.
Yeah, exactly.
But it was very interesting and exciting. And so I closed that and then quickly got another one under contract. And we closed that during my spring break or something. And then for my third project, I actually was buying a third deal up in a market up in Santa Barbara County. And there was a real estate class that I was taking. I went to the prof and I said, hey, I actually have to do this for work. And I was like, can I use this as my, sort of thesis for this class? Because I don't want to do 2 different things.
Right, you're already working.
Yeah, I'm already working on it. This is a real thing. He's like, yeah, it's fine. So I used a real acquisition, my third acquisition at Kennedy Wilson for credit at school.
Wow.
Kind of funny.
Right.
Yeah, that was actually kind of funny.
2 birds with one stone.
Yeah.
So at the time.
Yeah. So that was actually fun. And then, from there, kind of took off.
Just started doing a bunch of deals, and full time after you graduated, it was.
Yeah, exactly.
You were irreplaceable at that time.
Oh, never irreplaceable.
Well, sure, but I was like you were adding a lot of value.
I felt like I was adding value, but I didn't look at my job like that. What I did was, for the next 5 years, I thought of myself as learning. And so, every day I was grateful for my job. Every day I was grateful for the experience of learning. And I kept thinking that, well, this is good. Now I know how to do this, and now I know how to do that. And now I know this market. Now I know that. When we started buying in Seattle, great. Now I know Seattle. And, I kept thinking of it as an internship, really, even though I was, rising in the company and rising in the group. But I think that mentality helps. It helped me back then. And currently, it still helps me. I still think of myself as learning. Yeah, I'm learning the business. I'm learning what to do. I'm learning what not to do. And every day it's like, oh, maybe I shouldn't do this. Or that's not the way to look at the world. And some things give me a competitive advantage because that knowledge is actually pretty good and accurate. And other things brings bias to the table. And maybe sometimes I shouldn't be thinking that I can't do X, Y, Z.
Interesting.
Sometimes the less bias you bring, the more opportunities you see, or sometimes you bring that bias and that's learning, so that's, it's informative that you shouldn't buy some asset. So, it's that part is interesting to me.
It's funny. I just was watching another podcast, and they were the guest put a question on the host, and he was like, so it was an analogy basically. Let's say there's a fire, right, at a home's on fire, and you have 10 people there, and there's a lake, and so each person is grabbing water and they're throwing it on the house, right, and they're just doing this, and it's just not going out, right, and someone says, hey, wait a second, let's take a step back, everyone go fill up your bucket, we'll get in a circle and we'll throw it at the same time, right? And sometimes it's that outside perspective, and then obviously the flame goes down. It's like that outside perspective. Sometimes when you have, like, maybe in the past doing one by one has worked for you, right? And it's very, I think in this business in particular, because things change, but also things stay the same in terms of fundamentals and like first principles thinking. But I'm constantly pushing myself to try to take a step back and see it from a different perspective, because so many things, our beliefs, what is ingrained in us, our experiences shape how we think about certain scenarios and how to overcome challenges, because every day is a challenge. And I think it's super interesting to be able to at least be aware that you don't know everything, and that maybe you are looking at this from a different or a perspective that maybe isn't as beneficial, or a different way you could be looking at it that would fit and fit all the criteria that you're looking for in that scenario.
Well, it's funny because as it relates to real estate, I would tell people and employees and, I went back to the Anderson School and taught gave a couple seminars or whatever. But, one of the easiest things to do, and this is also in entertainment, one of the easiest things to do is to say no. It's so simple. It's a little 2-letter word, right? So, no, that's a bad deal. No, we don't want that. No, doesn't fit. No, whatever.
Yeah.
Your script's no good. No, whatever. It's so easy to say no. It's so much harder to say yes. And it's also in the real estate space, what I found kind of, I don't know why, maybe it's arrogance or ego or whatever, but so many people would answer like, oh, they got that? Oh my God. Oh, they're crazy. Oh my God. What are they? They're idiots. They must be stupid. Or how do they pay that? They wait, what? A 4 cap? What do they do? How dumb could they be? And so I used to tell, literally teach classes in this, and employees and interns and stuff. I said, guys, and women, obviously.
Yeah.
We don't, I don't want to hear ever you say that about somebody else's underwriting. Instead, ask yourself, what did they see that we missed? Isn't that a little bit more challenging? Instead of, easy to say no, wow, they underwrote with XYZ assumption. Well, why didn't we do that? We missed this opportunity.
Yeah.
We missed an opportunity. Not that they were crazy, not that they overpaid. That's my favorite overused, they overpaid. No, maybe they did, but maybe they didn't. So,
and it's real estate's such a weird business too, where timing does have a lot to do with it too, right? So
for sure.
In that moment, in that time, it could have looked strange to everyone else because of the timing, but for whatever reason, things change and it looks genius at that point, or vice versa. And we're feeling that or seeing a little bit of that in today's market with interest rates, where completely out of anyone's control, investor-wise, where they jump up at the fastest rate, I think, in history. It's like that's a black swan event that a lot of people would not have assumed or had assumptions, because at the end of the day, the underwriting is assumptions, right? You're making future bets on what you think is likely going to happen based upon your experience and knowledge and studying and research and things like that. But no one knows what's going to be happening in the future. And so I think having the base of knowledge, having ideas to bounce off other people, and have people in your corner and mentors who can maybe have experienced situations like this, definitely seems to be a key that I've noticed with a lot of the clients that I work with. Is there was someone in their corner, or someone who believed in them, or they had this kind of this sounding board to bounce ideas off of, because everyone's trying to figure it out at the end of the day, and no one's going to get it 100%. But if you can learn and take some, years of experience from someone else, like, why not take that?
Yeah.
You know what I mean?
Yeah, absolutely.
Which actually brings me to a point, because you've worked with some of the legends of the industry, right? You've crossed paths and worked directly, indirectly on deals, communicated with. What do you think is a through line between the very successful legends of the industry that they do differently, or what makes them, is there one thing or skill set that you think separates them from the other people all trying to do the same thing?
I think it's a good question. I think maybe the consistent factor is the people that, at least that I truly respect. They're not trying to reinvent the wheel. They're not trying to get too cutesy and creative, while, some people can make a ton of dough doing converting a hotel to an apartment building. It's like, great. But the people that I've sort of followed and would learn from, they would look at it and say, well, we don't need to be that creative. Let's just do what we normally do. Bob used to tell people, like, hey, I'm like a fisherman. I go fishing, and I bring home the fish, and that's what I do every day. Just go out, do the same thing, and, let's be boring.
Yeah.
Let's do the same thing over and over and over again. But let's get really, really good at that same thing. And it's kind of I took that to heart. I found this great project once, this amazing senior housing deal where it was such senior housing, but you could have added whatever medical services and food, and it was all set up for it. And what a great cap rate, and all that. And I underwrote it. I was like, oh my gosh. And then I thought back to some of those conversations that I've had, and I was like, you know what? Why don't we just be boring? Let's go buy apartments, and let's make the apartments something other than little boxes. Let's sell the community. Let's renovate to a different kind of vibe, or a different sort of standard, and let's bring something special to the residents by doing what we know how to do. Let's bring a standard of living a little higher for some folks that could use a little higher standard of living.
Yeah.
And are willing to pay for it.
So identifying your zone of genius and sticking to, almost to a point where it hurts, that opportunity that, people, the analogy, the woman in the red dress, is like, there's so many distractions, and especially the better you get and the bigger you get, the more opportunities that come to you. And being disciplined, or at least having enough people around you to keep you in that discipline of like, no, this is what we do. This is what we're good at. This is where we have a competitive advantage. Like, let's do this consistently over time, which everything compounds when you do something over and over and over and over, especially if you do it well over and over and over again. Is that what you're saying?
Yeah, that's basically what I'm saying. I mean, and you start to see things, you start to see similarities, and you kind of know what operations will be like in certain submarkets, and, you can kind of get a little bit of a nuanced approach, and maybe because you've become really good at your little specific niche, you can find that extra dollar to pay the seller and win in a bid, or you can convince them to sell it to you over the next guy because, you've got 6 other projects that look just like it. And so, I think that like kind of forming that expertise is kind of critical.
I'm curious to know if you had your knowledge, right? But you had to start over from zero. So let's say someone in their 20s, 30s, in your position, 35, right?
Yeah.
Get in the business, or young 30s. What strategy would you do? And in today's market, what would you do today to try to get to where you want to go as a real estate investor operator? What's the strategy?
I would say start small, and start with friends and family, and start with something you can be pretty sure about. And
how do you find the deal?
That's $1 million question. I think you get on lists and you find investment sales brokers that'll, send you stuff. I would say, figure out what you think reasonably you can afford, i.e. how much money can you raise. If it's $500,000, it's one kind of deal. If it's $5 million, it's another. And once you've figured out what your money raised could be on the equity side, do the back of the envelope and figure out what the debt, can be on it, what you're qualified for in terms of the lender and your recourse carve-outs and all that kind of stuff, or, your banking relationships. And once you have that capital, sort of imaginary capital in your head, then go out and meet with some of the investment sales brokers, or, if it's duplexes, it's duplexes. There's a certain kind of realtor that works on those specifically, or if it's a fourplex, or you get into the apartment space of 5 units and above. If you can get brokers to realtors, whoever, to show you some 5plexes or 8plex, 10plexes, whatever it is, and start talking and socializing what you've got, and be convincing that you have the money, that you can do this, that you've spoken to all of your investors and everybody's on board. They just need an XYZ, whatever. And then lastly, but maybe firstly, I would say get rid of your ego and make sure that when you're talking to investors, you're not saying, I'm going to do this and I'm going to deliver that. And when you're talking to the realtors or the brokers, you're just, you're starting out. Be earnest and real, and don't say, I've got this. Don't, I'm the kingpin, whatever.
Yeah.
Unless you are a kingpin.
Yeah. Unless you got
throw Eddie out of
family money and trust fund, right?
But if you're kind of trying to just figure it out, man, just be real and say, listen, I have the money supposedly. I'm not going to BS you.
Yeah.
But I've been told that if I can find a project that's a 5plex in this corner of the market and in this little area, and it shows this kind of return dynamics, then I can close this deal, and I'll absolutely pay your fee and be excited to do it.
Yeah.
And you know what? It's not the first. It may be the first one I'm doing, but it won't be the last. I want to build a portfolio and be real with this person who's staking their time and speccing their future on your ability to close.
Yeah.
Be respectful of that. Like, why would, some people go in, whatever, chest thumping all the time. I maybe it works. I don't know. It doesn't work for me. I got to be real.
No,
So,
I'll say when people are upfront, and it helps me too as a broker, when someone, especially someone who maybe hasn't had the track record as some of these other clients that we have a surety of closing, or a high likelihood, right? Being upfront and honest, I think, is like, hey, here's what I got. Here's how I'm looking at it. What do you see? Like, what is your opinion? Like, here's what my game plan is. I'm planning on growing, and just being super upfront with it. I think it goes a long way to building trust for us too. And, lock on, I would say too, is like lock on to a younger broker too. Someone who maybe has done a few deals and they're picking up steam, and you're like, okay, I think that person could potentially continue in this business. And if we can go and align together, right, we could do a bunch of deals together. Because of that relationship, which is, like you said, real estate is such a huge relationship business. Mm-hmm. And everyone talks about the off-market deal, right? The usually the best deals that you can get are typically the off-market ones, just because of you have an opinion on that?
Maybe.
Tell me
I do,
about that.
Yeah. I've bought tons of off-market stuff, and I've bought tons of on-market stuff. Sometimes off-market is not so good, because you might be overpaying. You might be seeing something that's not really there.
Is it that psychology that, like,
Absolutely.
It's off-market and I need to pick this up because it could be a steal, and it's a psychological thing?
Absolutely.
Interesting.
Absolutely. And investors fall into that trap too. I mean, I got to say, if I showed somebody that said, oh, it's off-market. Oh, really? Oh, this must be good. My first response, market or off market, is, well, what's the story of the real estate? Like, is it the broker has been showing it on market for the last year and a half, and now it's off market? And okay, but it's been fully marketed. Is it off or on? I don't know. How do you categorize that? Or if it's truly off market, like you've got a buddy that's selling it, and I've bought those also, are they selling it to you because they like your smile? Are they really super, like, nobody's that good a friend.
Yeah.
And nobody's like, hey, I'm going to lose $7 million.
Yeah.
Nobody's doing that.
Yeah.
So then the question is, well, why isn't this being marketed? Well, if that's good, if there's a good reason for it, okay. But I've bought things on market that I just, like I said, I would just see something a little different than my competitors. Oh, if we can actually fix this entire amenity package by not having the office and the amenity together. Like, why don't we move the amenity to an outbuilding that's already existing that I can now just renovate, and instead of doing, and then I can recapture this as XYZ space, and just looking at it slightly differently. And nobody is underwriting that, potentially.
Yeah.
Or I had a project that was fully marketed that I went down, this was down in San Diego, or greater San Diego. And the units, it was such a cute little deal. And they were 2-by-1 units, 2-bedroom, 1-bathroom units. And I looked at it, and it's the most interesting layout I think I've ever seen. I was like, this is just weird. But I stood there and I was like, wait a minute. If I drywall this up and move the shower to over here, install a new toilet over there, all of a sudden I have a 2-by-2 unit instead of a 2-by-1 unit, which commanded a huge rent premium. I mean, we're talking about, $400 or $500 just by being able to look at something and saying, yes, we're reducing some shelf space, and maybe instead of a tub, a tubs and shower, it's just a shower stall. Like, okay, it still counts.
Yeah.
But literally nobody else was looking at it like that, and so I was like, I can pay a little bit more.
Yeah.
And so that was a perfect execution of that idea. Like, I just saw something that other people weren't looking at.
Yeah. So, which speaks to the point of going and seeing real estate, right? I know
for sure.
Which is a big conversation I have with people who are thinking about buying out of state, where they're used to Los Angeles, right? And I'm like, yeah, people made a lot of money buying out of state the last couple of years. They've also lost a lot of money as of recently too. But what you need to have a true understanding of the area, the asset, what tenants want, what is going to draw that premium. You almost have to have this boots on the ground presence. Otherwise, the people who do have the boots on the ground presence, there's a better chance that they understand a nuance that maybe you're going to not pick up on or miss or do whatever, which I know you've bought out of state. That seems to me as like wherever you go, whether you're going to be, okay, I want to go invest in Cleveland because there's, decent pricing and I think there's opportunity in rent growth and, supply demand. Have a clear understanding of what is actually the fundamentals of that market.
Oh, for sure. I used to think about that all the time. Like, yeah, I could go invest in let's just pick on Cleveland.
Yeah.
Sure. Of course I could do what I do here. I could do there. I could buy in Cleveland.
Yeah.
But don't you think there's a guy just like me in Cleveland that knows Cleveland as well as I know Los Angeles?
Yeah.
I think so.
Yeah.
Who wants to be the guy from out of state buying up all the local real estate that nobody would touch because they all know the history or they know the reals about some location.
Yeah.
I don't want to be that guy.
Yeah.
So I think people fall into that trap all the time. And, they ignore their own backyard. Yeah, I think it's a bad mistake. And investors, if you're sitting out there with these ideas that you're going to make a mint by buying in red states as opposed to blue states, well, you're not. It's not going to happen.
Yeah.
That's not why people make money. It's not the politics.
Yeah.
It's the availability of housing and the supply of housing and what are the fundamentals in the real estate sector, not whether somebody is, not the politics, not whether we don't like our tax structure in California. Yeah, nobody does. I get it.
Yeah.
But let's talk about for a second that we're the 5th biggest economy in the world. Like I'm just tired. I know it's a little bit of a tangent, but I'm tired of hearing from investors who don't want to be in California. Like, well, okay. Well, would you just ignore Sweden?
Yeah.
Would you say, oh, well, we're a red line France?
Yeah.
Maybe France, but
yeah.
but we're going to redline the UK.
Why?
California is a bigger economy than the United Kingdom.
Yeah.
You're going to not invest in countries because of the politics of blue versus red? Come on.
Yeah.
That's the dumbest idea ever.
I think what a big equalizer is real estate, and a deal is a deal, no matter if it's in the toughest political environment or the most lax political environment. And there's pros and cons to each.
Yep.
But a deal is a deal, and there's deals everywhere. There's always deals everywhere, especially in the robust market that is, multifamily and the real estate market.
Yeah.
I want to talk about something that we're doing now and that I've seen you been a little more active on and maybe is a little taboo to many in your position, which is social media. And I'm just curious to know why, and again, I can make some assumptions based upon the comedy background and being pretty comfortable in that space, but like, why have you leaned into social media as a principal of a multifamily investment shop? Why is that something you've spent time and money and energy?
I haven't spent that much time doing social stuff. You don't want to be left behind as technology kind of expands. And I'm looking at everything right now in terms of positioning and marketing and all that. And interestingly, some folks have really embraced the influencer kind of whatever mentality, which I have not done.
Yeah.
And I don't know how well it's going to work for them. I know my own, everybody's got Instagram and whatever. All the feeds that I'm on, all of a sudden I'm seeing real estate deals, and I'm like, I don't know how the algorithm works. They've identified me as some kind of whatever.
Yeah.
But and I try not to click on anything because it's like
they're tracking you.
Yeah, they're tracking me, right? So I'm like, I don't know, this is weird. But like all things social media, the danger is that you don't really know anybody. Mm-hmm. You don't really know if this person is real. Mm-hmm. Guy getting on social media saying, "Oh, I'm going to introduce you to 10 people, and you're going to pay me for those introductions, and those 10 people are going to give you money for your next real estate deal." It's like, really?
Yeah.
Is that the best way? Yeah, that's not the best way.
No,
it's a way, but it's maybe not the best. So I'm very cautious about being on social media and doing anything on social in terms of anything more than just, when somebody Googles me, I should pop up somehow so that I'm a human, but
for capital raising,
right? For capital raising and for, market presence and, investment sales brokers. Who's this? Who's maybe the younger folks who, they can run into their, the senior person running the office and, I found this guy, Eddie Ring, New Standard Equities. You know this guy? I was like, Eddie, of course I've known him for 20 years.
Yeah.
Oh, okay. I want that level of recognition and people who understand that I'm, that I'm a real, functioning human in the space.
Is that calculated, or is that something you've just kind of stumbled upon?
Not calculated.
No.
Yeah, not calculated. I just don't, again, it's like it goes back to my entertainment days. I don't want a bunch of fake book kind of, relationships. Mm-hmm. Not into that at all.
Yeah.
I'd much rather be known as a real guy with, real investors and real properties that are, hopefully going to do okay. And my future assets, I'm pretty darn sure will do really well.
Yeah.
Because I think we're by the way, I don't know if anybody's told you, the bottom already passed.
Yeah.
We're now in the upswing. I'm 99.9% sure. Yeah.
Why do you say that?
With interest rates getting cut, I think, and all the capital that's been on the sidelines and no sign of a real economic recession, like, severe recession where rents would drop. All of the data is pointing to even the oversupplied markets are being absorbed. which is shocking to me, but somehow those units are filling up in the Sun Belt. I just don't see anything on the horizon that's going to lead to a real, true recession. And so I think the Fed will be cutting rates, short-term rates.
Mm-hmm. That
will have an impact. Maybe not a 25 bip reduction won't do much. A 50, I don't know. Actually, it's probably by the time I don't know when you air this thing might be done. But, I think that the general trend is that rates are getting cut by about 200 bips over the next year, the short-term rates.
Yeah.
And that will have a downward pressure on cap rates for sure. And then it's back to real estate fundamentals. Can you buy at a 4.5, 5 cap, improve the asset, get it to a 6, sell it at a 5, and you take that spread and you pocket the profit and give it to your investors and move on to the next
playbook.
Yeah, just keep running the playbook.
So right now, if you feel that way, right, what are you doing to put yourself in a position to take advantage of that?
So I'm meeting equity. I'm meeting folks who are interested that have like-minded views of the space in markets and product type.
Mm-hmm.
There's a lot of institutional capital out there that's looking for kind of 2010 and newer vintage at 6 caps, which isn't happening.
Mm-hmm.
And so a lot of that capital is going to, that'll go down to 5 caps and, whatever. But there's a lot of demand from the capital providers for that type of real estate. And right now nobody wants the 60s, 70s kind of stuff that I specialize in terms of the equity. So that's been challenging. But we've got our feelers out. We're looking at 10 to 15 projects right now, actually, up in the greater Seattle market.
Mm-hmm.
And we're hoping that we're going to start seeing some transaction opportunities in California, especially in the Bay Area. And because that's where all the job creators are, I think, for the most part.
Yeah.
We'll just kind of keep our noses to the grindstone and keep looking for assets and money.
And keep going.
Yeah.
I love it. Well, before we wrap up, is there anything that you want to leave the listeners or the audience with that for you either has changed your perception or recently something that you've changed your mind on, or anything that you think might be beneficial to them?
I don't know. I think we've touched on a lot of things. I think, critically speaking, I think partnerships are important to really, spend time thinking about. Employee partners are, everything seems like a good idea at the front end, and, things can turn sour and things can go wrong in the wrong direction. And you have to have a slate of partners that are, that understand the landscape that you're in and understand what you're trying to do and make sure you're on the same page. And that goes with employees as well. I can promise the world to somebody, but if the world changes, then, they're not going to make a share of the profit, despite the fact that they work their tails off, That's kind of the hard part about this, is that everybody's taking a risk at some point. And the idea in all of real estate investing is how can you mitigate the risk, and how can you leverage that risk to actually generate some returns for yourself and your family and your employees, and ultimately your residents. So
amazing, Eddie. I appreciate it.
All right,
thank you very much.
Yeah, thank you.
Of course. Thank you for listening to this episode. If you enjoyed the podcast, it would mean the world to me if you could rate us 5 stars on YouTube, Spotify, and Apple Podcasts. It really helps us get our name out there and helps us get fantastic people like our guest to share their insights and knowledge with you. Again, my name is Taylor Avakian. I specialize in the sale of apartment buildings in Los Angeles and Southern California, and I look forward to sharing more of these conversations with you. See you in the next one.